Good morning then, folks, as we head into European trade on Thursday, the 14th of September, and we have been through CPI yesterday out of the US, and we head into the ECB a little bit later on today. So we'll have a look at both of them once we get around to some charts in a minute. But in terms of headlines, apart from that, not really too much to go off. Markets really focusing on the inflation print of yesterday, and then into CPI from today. You can see across, you look around different news sources, you scroll down all the different the different articles and stuff. Every bit of every article talks about the ECB, or it talks about CPI. It is my main focus of attention this week, but in terms of fresh fundamental drivers, other than that, there is not many. But you can see reaction. We'll have a look at the reaction once we get around to some charts in a minute. But US equity futures higher across the board. European equity futures relatively positive. The Nikkei up 1.6, 1.7%. Asia Pacific index up 1%. A couple of the Chinese stock indexes down, not great, but overall a fairly positive Asian session post CPI yesterday, which shows you what markets really think of it. Look at US yields lower across the board, US dollar lower across the board, so that gives you a clear indication as to what markets think of that CPI print yesterday. Stocks higher, yields lower, dollar lower. Pretty clear indication of what they think. Your Australian dollar, Kiwi dollar are higher than off the back of that as well. So a positive handover from the Asians into the European session today. But in terms of that continuing, obviously we've got the ECB to think about a little bit later on today. So in terms of massive moves, kind of stocks kind of romping to highs, a little bit tricky to believe if that will happen pre ECB this afternoon. But ECB this afternoon, we can see if we flick across to the calendar onto Thursday, 1:15 this morning. Now, to 1:15 this morning, 1:15 this afternoon. I can see these inflation prints, right? Core CPI month over month beat consensus. The headline figure year over year beat consensus, right? The month over month for the headline and then the year over year for the core both came in line with expectations, right? Now, markets were fairly certain that the Fed were not going to hike interest rates at the next meeting, right? That was a pretty foregone conclusion. In terms of hiking the rest of the year, there's still a 40% chance that they will, but albeit slightly above consensus, it hasn't massively beat consensus. You've had a little bit of weak economic data over the last couple of weeks. After the last couple of weeks, step in from the US, and unless inflation massively beats consensus, you'd have to imagine the Fed will struggle to continue hiking interest rates. So the fact that does not massively beat consensus, the fact that it was only a small bit, markets have kind of taken that and ran with it as a bit of a, it's not too high, so we don't think they'll hike interest rates, and that's the kind of expectation, or that's the kind of reaction that we have seen post CPI yesterday. But I could have a flick across equities. You can see equities certainly across the US. They had a bit of downside into the close yesterday, but then have rallied up higher into today. They reversed all those losses from nearly into the close yesterday and have rallied overnight. Dow Jones not reversed all those losses, but recovered most of them. Was kind of where it was pre-release. The Nasdaq reversed all those losses and through the highs. The S&P reversed all the losses through the highs. The Russell still slightly lower. Russell and the Dow Jones, better gauges of the actual overall economy, so they are still slightly lower. But the S&P and the Nasdaq both rallying, and they are a net positive from the release yesterday. So look at the US dollar. US dollar is weakening. You can see the Australian dollar pushing higher. You can see Euro dollar pushing higher. Kiwi cable's not really pushing higher. Obviously, you had weak GDP prints. You had weak GDP prints from the UK yesterday, but it's still higher than it was post-release. So that's something to note. Dollar Swiss grinding lower, dollar CAD grinding lower, dollar yen grinding lower. You can see bond yields, the US 10-year, US 2-year yields are down. Again, it shows you the reaction to CPI. Is it a clear-cut reaction? Is it right? This is absolutely 100% what is happening. No, not really, but it's still something in line with each other. Equities, the currency, and bond yields all moving as expected from a weaker than anticipated print, but maybe markets were hoping or expecting for it to be higher than it actually came in. Right, but that's what you can see. Bit of dollar weakness from yesterday. Now you can see obviously the Australian dollar was helped a little bit by the unemployment, by the labour market figures overnight. Unemployment rate stayed the same, but part-time jobs being added, full-time jobs being added. The employment change has grown, albeit a lot of the part-time jobs. But the Australian dollar has liked that overnight and has popped higher. So it's contributed to kind of broad-based US dollar weakness over the course of the Asian session. Again, is a massive weakness? No, but it is still something for us to go off. Now this afternoon you got the ECB. Right, in ECB there's a 60% chance of the ECB hiking interest rates this afternoon. Right, so markets are unsure as to whether they will or will not. There's reports out of the different news sources that even the participants on the board are undecided as to what they're going to do. So there's no kind of clear cut. Will they or won't they? You can see even consensus on this is 4.25%. Trading Economics think they will hike by 25%, which will bring the interest rate to the highest it has ever been since the euro was created back in 1999. So again, can we do much analysis into that? I mean, if you think going forward, I mean, numbers in Germany have been weak. Numbers across Europe have been weak in recent weeks, even recent months, right? So if they continue to hike, they are hiking into an economic downturn, right? It's from manufacturing, it's fed into services, which will feed into everything else, right? They are hiking, but they are hiking into an economic downturn. They will. I mean, you'd imagine they would want to avoid that, but they don't seem too smart. I mean, they hiked interest rates too late to begin with, right? And now they're in this situation where inflation is still too high, and they're going to have to hike into an economic downturn. Well, if they made the right decision to begin with, hiked interest rates with all the other economies or central banks, wouldn't be in this. Well, I say wouldn't be in this mess, but they wouldn't be in sort of as much of a mess where they kind of have to hike interest rates to get down inflation into an economic downturn and risk making that economic downturn worse. So in a pretty difficult position. Will they or won't they is the question. I would expect some volatility either way out of the ECB at 1:15. But after the reaction to the Fed to the CPI yesterday, right? After the reaction to the CPI yesterday, if the ECB go and hike interest rates, right, that should bring about some broad-based US dollar weakness and some broad-based euro strength. So euro dollar longs are a good idea if they hike interest rates. If they do not hike interest rates, that should be weak across the board from the euro, as there's a 60% chance that they will. That's what money markets are priced in pre-release. And euro dollar is always a good one to short, but euros across the board, it's certainly something to look at. Bit of positive Australian data this morning. Maybe short some euro Aussie isn't a bad idea either. So I mean, in terms of a prediction for myself, I don't really have a clue, to be honest with you. Do they hike, do they not? There's justification for hiking. There's also justification for not hiking. So we're going to have to wait and see how that plays out at 1:15 today. But we will be ready. We'll be waiting at 1:15 and we'll see what they have to say a little bit later on. But retail sales then and PPI follow just out of the US as likely to take a back seat as markets are reacting to the ECB. But we'll watch that. If they do hike interest rates, you get a bit of weak economic data from the US, then that kind of can cause a decent trade. But consumer spending is supposed to be down. PPI expected to rise to 0.4%. If that beats consensus as well, gets a bit tricky. So there's a lot of things taken into consideration. A little bit later on today, you're going to have to watch the numbers, wait till how they come out. But ECB, main focus of attention today. Will they or won't they hike interest rates is the question. There's reasons that they do. There's reasons that they don't. We'll have to wait till 1:15 today to find out.